Have you ever seen some wild success stories with people turning just a few $1,000s into millions with cryptocurrency? Well, you're in luck because in today's video, I'm going to give you my exact strategy on what I'm doing to become a crypto millionaire from now until the next bull run. You're not going to want to miss today's video, so make sure you stick around to the end because the last tip I'm going to give you is the most important. Without further ado, let's roll the intro. Welcome to BitRush Crypto. My name is Kyler, and in today's video I'm going to be sharing with you my secret strategy from the bear market to the bull run to become a crypto millionaire. For those of you who don't know, I did turn a little over $1,000 into close to $1 million the last bull run. I made a few mistakes and I learned a lot from those mistakes, and I've readjusted my strategy, and in today's video we're going to go over that strategy and I'm going to tell you exactly what I'm doing right now in the bear market to prepare for the bull run so I can be ready to become a crypto millionaire in the next 2 to 3 years. It's a simple and easy to use strategy that anyone can implement if you have just a few $1,000s, or if you have steady cash flow, regular paycheck, you make money trading, whatever it is. As long as you have a little bit of money coming in every month or have some startup capital, you're going to be able to use these tips, tricks, strategies, and we'll all become millionaires during the next bull run. But first, if you're new around here, make sure you do click on that bell notification after you're subscribed to my video, as this is only a part 1 video. I'm going to continue to post more videos on cryptocurrency trading and investing, especially in continuation to this video with the later parts of the strategy as the bull run continues. Also, if you are finding value in my video, make sure you click on the thumbs up, as it will help my video reach more people just like you. As I mentioned in the intro, I'm going to be giving you the most important tip last, so make sure you guys stick around for the full length of the video to get that final tip to ensure that you have your strategy locked in place to become a crypto millionaire. Alright, first I want to talk a little bit more about the last bull run and how I did turn just a few $1,000s into close to $1 million, and then how I lost it all. Not all of it, but most of it I did lose. I did not realize those gains, guys. I made the rookie mistake of holding to the bottom. Still have some of that cryptocurrency, so this time we're at least starting with a little bit of coin in our wallet. We do have a little bit of money that we cashed out, so we're not starting at complete zero again this time. So during the last bull run, the way I was able to make a lot of that capital was on leverage trading. The problem with that is right now we're not in a bull market. So that's really going to be the second half of this strategy, is using leverage on our trades, investing in small coins, small caps, altcoins, and getting huge 100,000, 10,000x gains. But we can't do that right now while we are in a bear market. So what we're going to talk about right now is the first step of the process, which I didn't do last time, is turning that money from a small amount into a large amount from the bear market to the bull market, and then I'll create another video in the future again going over my future strategy. What a lot of people don't realize, and they try to keep their capital on the side and wait for the bull run, is that you're missing out on about 20 to 30% of the gains if you're not investing in the bear market. In cryptocurrency, we run on a 4-year cycle. It's based on the Bitcoin halving. And so during these, bear market years is where you're actually going to be able to make a good chunk of your profits. If you wait until the bull market hits, you've already potentially lost out on a good 20, 30, 40% of the increases that you could have got by investing at the bottom. So it's an important piece of our strategy is to start investing as soon as possible. Obviously, if you guys could have started investing months ago, back when Bitcoin was at $10,000, $15,000, that would have been best. But I still believe we are at a great opportunity in the market right now. BlackRock Capital is looking to get an ETF. There's other ETFs being cleared through the SEC. People are putting them in. And once those ETFs come, it's going to bring in a ton of money from traditional investors, which should kick off the bull run. We also have the next Bitcoin halving coming up in just a few months. And once that happens, it is a catalyst to start the traditional bull run. So we have several pieces moving right here. We want to make sure we do not miss out. So strategy number 1 is to make sure we have capital reserved. Okay, so this is where savings comes in. You want to make sure you're putting aside a little bit of money every single month if you're getting a paycheck or if you're making any kind of income. You need to be saving 10-20% of every dollar that you make on the side. Okay, get it ready, and we need to have that capital in reserve so when the price does crash again, if it does crash again, we can make a big investment. You can also possibly leverage some credit, take a cash advance on your credit card. I'm not telling you you should do that, but it is a possibility, and it's something that I'm probably going to do myself. And so just being full disclosure with my strategy, I'm building up my credit right now, which is why I recently made a video on increasing your credit score. You guys can go ahead and check that out. Should be popping up above right now and also linked in the description below. Again, this is a high risk strategy. I'm not recommending it to anyone. I'm just telling you what I'm doing. I'm making sure I do have capital outlay available. So if something happens, if Bitcoin goes back down to 10,000, I'm going to go all in on it. That's the conviction I have. And I do believe in the next 2 to 3 years that Bitcoin will potentially 4, 5, 10x from its price that it's at right now. So if it goes back down to 10, 15,000, make sure you have a little bit of capital on the side. I also am saving, some actual cash, cashed out some crypto last time. So I do have some USDT available that I can potentially purchase with as well. So that's going to be our tip number 1, is making sure you do have some capital outlay in reserves. It's a big piece of investing, is you need to have cash on the sidelines ready to deploy when the time comes. If you don't have a chunk of cash right now, you can start saving. As I mentioned, make sure it's at least 10% of your income you should be putting aside in an investment account, and just keep it in cash. Keep it ready for when the time comes. Our second strategy is going to be dollar cost averaging. As you guys know, this is something I preach on the channel all the time. If you're new around here, you'll get used to hearing me talk about dollar cost averaging, and it's short DCA. So if you ever see that in a chat or whatever, if I post that in a comment, DCA is dollar cost averaging. What dollar cost averaging means is you're going to have a set amount of money that you purchase a cryptocurrency or a stock, whatever it is. Today we're talking about cryptocurrencies, obviously, but you're going to purchase it on a set interval of time. So it could be every week, could be every 2 weeks if you get paid every 2 weeks, could be every month, could be every other month, could be every single day. It doesn't matter. You guys pick what's best for you and your strategy. But essentially what it comes down to is time in the market is better than timing the market. So in our first tip, we're looking to time the market and obviously buy when things are low. That's trading 101, buy low, sell high. So we want to be buying low on that first strategy and having the cash available when the price does go down. And most likely it will go down again before it does go up. But with our second tip, what we're trying to do is just dollar cost average in, which is continually buying a set interval. It could be $100, could be $1,000, could be $10,000. This is going to be individual to each one of you. However, any small amount of money right now, continually purchased over time, is going to add up. And if you get in a coin that does have staking available, you can possibly earn additional yield, APY. So one of the coins that I really like right now, and part of my strategy, is Polkadot. Polkadot at the moment of this video is under $5. It's about $4.30. And so it also earns an additional 10% APY, or a little under 10%, 9 point something. And so if I continue to buy it, I continue to stake it, in addition to the price increases that I could potentially see. The past high and during the last bull run was at over $50, which would be more than a 10x gain. But I'm also earning 10% APY every single year. So all that money that I'm putting in is continually being compounded with that APY, and I'm just getting more and more Polkadot, and then hopefully we'll realize those 10x gains on that coin. There are other coins also, USDC, Ethereum right now you can stake. There's a lot of coins, so that's, a topic for another video, and we'll probably do that. What coins are best to be staking and APY yield on if you are dollar cost averaging. Just make sure you're dollar cost averaging into a coin that you believe in. Again, that's not the topic of today's video. It's just the overall strategy. But as I mentioned, the one that I'm going into is Polkadot. I'm also into Ethereum. I'm also into Bitcoin. So pick a few coins, diversify your portfolio, and continue to dollar cost average in. So essentially right now, while we are in the bear market, we actually want the price of the coins to go down. As the price goes down, we're able to purchase more coins for the same dollar amount. Every time you make a new purchase, your price averages to the total, combined of all of those different purchases over time. And if the price continues to go down, it's going to lower your average cost of entry. If the price goes up, it's going to increase your average cost of entry. However, the key thing with dollar cost average is not to worry about the price of the coin. It's to worry about the number of coins you are accumulating. The goal is always to accumulate more coins. So we're trying to get more coins, which is exactly why we're also staking those coins. And as I mentioned, our final tip here is the most important tip. What this tip is the one that messed me up, as you guys heard me talk about in the beginning of the video, on how I forgot to cash out, or I didn't forget, I just didn't do it. We need to make sure we are taking profits along the way. So we're not quite there yet. Obviously, we're talking about accumulating more coins. We're going to leave those coins in our wallet. We're going to purchase and make big purchases. But once we do start to make a bull run, you need to already have preset numbers in your head of where you're going to be cashing out. For me, I'm going to start cashing out when we hit our previous all-time highs or get close to previous all-time highs. So with Bitcoin, that would be around $70,000. With Ethereum, it's going to be close to $5,000. And with Polkadot, it's going to be close to $50. And you guys can check the charts on whatever coin you're investing in. And as we start to get close to those previous all-time highs, you can create a strategy for your cash out. Me personally, I'm looking to cash out about 25% of my total portfolio as we hit previous all-time highs. The reason I'm looking to do this is usually when we hit those key levels, we're going to also have a drop. Other people are going to be taking profits. They know we're hitting previous all-time highs, and so the market tends to take a dip. I'm not saying that's it and we're done with the market, which is why I'm only going to be cashing out around 25% of my total portfolio. But again, this builds up our cash reserve, so as the price does crash, if it does crash on a dip, we're able to redeploy that capital. We're also able maybe now to shift our strategy a little bit and get into the second part. We're investing in low cap altcoins. We're doing some, 10x leverage trading, whatever it might be, but we're not ready to do that just yet. But as we do hit those key levels of previous all-time highs, we do want to make sure we take profit. And again, guys, it's not just as we hit those levels. You should also have predefined levels, price points that you are going to cash out completely or up to like 80-90% of your portfolio. That way, when the time comes, even if the price is continuing to go up, you diamond hand like me and just think that it's never going to end and I'm going to keep holding, it's going to go higher, this dip is just temporary, and then you end up with nothing. So you have to have this set before so the emotions don't get in the way. One key thing to trading is to put your emotions aside. So just look at it on a dollar amount. If I do a 500x, if I do a 30x, if I do a 10,000x, whatever that number for you guys is, keep it realistic, obviously, but make sure you set those levels. And when you hit those key levels, take your profits. Taking profits is very important. And just as we dollar cost average in, we can also dollar cost average out. So once we get to those levels, if you want, you could then set a certain dollar amount that you're going to cash out every single month, every single week, whatever it is. Let's just use an example and say that, every month we're putting $1,000 into our dollar cost average during the bear market. Once we hit the bull run, we could then try to do a $2,000 dollar cost average cash out. So we know we're cashing out at twice the level that we were putting money in. Again, guys, this is going to be individual. I'll keep you updated with what I'm doing with my strategies. And as I mentioned, my levels I'm looking at are previous all-time highs on the coins I'm investing in. And at those points, I'm looking to take out about 20%, 25% of my capital. Keep it on the sidelines. Be ready for a dip, ready to redeploy, ready to use that money for other strategies. So that's pretty much it. Let's go ahead and recap. Number one, have some capital outlay on the side ready to deploy when we do hit new lows. Number two, continue to dollar cost average into key coins that you believe will produce during this next bull run. I've given you some examples of ones I'm in: Bitcoin, Ethereum, and Polkadot. And number three, have preset numbers, preset levels that we're going to be taking profits at, and make sure you cash out and take profits. Okay, those are my 3 strategies that I'm using right now during this bear market. And again, you know, if you're not investing during the bear market, you're going to miss out on a good chunk of the gains. Just from the bear market to the bull run is where we will make 20 to 30% of our total capital. We'll grow our funds so that we do have more money to increase and become a crypto millionaire. I hope you guys did enjoy the video. If so, again, tap on that thumbs up button. Consider subscribing. Click the bell to be notified as I drop future videos. Go ahead and share it on social media with a friend if you did enjoy it. Leave me a comment. Ask me any questions. I'm going to try to answer every single thing in the comment if it's a real question, not just some, you know, crap. People put crap in the comments sometimes. If you guys ask me a real question, I'm going to try to make sure I answer every single one of them. Thanks again. We'll see you in the next video. Let's get that coin.